Over 40 built-in indicators, plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy. A starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
All right, folks, we are back with a very special guest from across the pond, from Great Britain. I love to say Great Britain out loud. Tiru Nagapan. Mr. Nagapan, how are you?
Very good, Jim. Very good. I just found out from you that you're just mastering the British language. Just
I know. English is not my strong suit. Writing, and I could read fine, but I'm not a good writer. So, but I could talk a lot.
Yeah. Not only that, but you can match that with chart analysis really very well. I just saw that. Very great.
Well, thank you for that. I appreciate that. Yeah, we had a couple winning trades this morning, a couple losing trades. Real-time sim account, past performance not indicative of future results. It's kind of weird because we have a whole bunch of events coming up, right? We have CPI coming out tomorrow.
Mm-hmm.
Then the next day, I think, is ECB. And then the following week is FOMC. And it's all kind of wrapped up in this low-volume holiday spirit, I guess we'll call it, which makes things a little tougher for me to figure out.
Yeah, it's true, isn't it? I mean, I was just reflecting when you were just talking about the ECB and all that. I'm a very strong believer that if you combine both, the fundamentals with the technicals, you get a stronger chance of capturing the direction and getting the move in. I mean, let's face the fact, right, Jim? The smart money is already in before the news comes, right? They got to get in. I mean, because at the end of the day, the only way in this economic or financial system, as a broad overview, to make money is someone must get in earlier than the other guy. How else can you make money in any world? Right, even in the physical product world, in the Amazon world, even in the financial markets world, the principles are the same. Someone is going to buy cheaper than the other guy, and he's got to sell it off to the other person. The guy who makes the biggest one is the one who gets in the most earliest, and usually those guys are the ones with the biggest amount of money, and that's usually smart money. So, in terms of when I hear a lot of conversations about people just talking about just fundamentals alone, and not even taking a look or second on the charts, I think they're missing a large piece of the puzzle, unless they are the guys who make up the markets, right? We're talking really inside circle. then if you're talking just about the retail market, a combination I believe is always helpful. In terms of where the markets is in terms of a projection for ECB interest rates and all that, we can see that the FOMC as well is coming up. I think the interest rates will go down. I think just to curb up with the increase the borrowing a bit more in terms for the economic improvement, and also Trump is there as well, and also in the UK just to pump up the spending a bit more again, you know, to get the economy back up again, and also to curb inflation down, you know.
Yeah, so with a combination of those factors and from a general economic point of view, should be a little bit bullish for equity markets, right? More money floating
Exactly,
around,
and which
more,
is what
yeah.
we're seeing, aren't we? Which is what we're seeing.
Yeah, yeah, for sure. Absolutely. So, if you're looking at all the markets right now, is there something that really excites you that you want to show, or is there, we're kind of slow today?
I think we can definitely take. I'm looking a bit more on longer term perspectives. I know usually
Okay.
in December it slows down a little bit in terms of intraday perspectives, even though you still can take it all the way to 20th December. Until then the moves get a bit more smaller. It whiplashes you a little bit. And also it's a
Mhm.
good time also to take some break, right? For traders as well, to
Oh
refresh as
yeah.
well, before they
Yep.
get back in. But I think for longer term, we can take a look at two markets. I think one is crude. I was taking a look at gold as well, which is a
Okay.
big topic. So maybe we can look at those two.
Yeah,
And
let's do it. Let's do it. I mean, both of them have caught a little bit of a bid in the last couple days.
yeah, so you know, we're taking some longer term positions on gold towards the long side, but I'll explain why. Let me just expand this as well. I mean, I'm just thinking we can skip over the or should I just go a little bit over the framework? Or people, I can refer them to actually the videos we did before, right?
Yeah, yeah,
Um,
yeah. Just yeah, you could talk a little bit about the framework for sure. We're not in any hurry.
okay, so just a little bit that before I go through a framework, just in case people think, you know what does that mean? What is Thiru saying and all that? You can always refer back to the videos on our channel, which is from NinjaTrader anyway. You can see we're going live here as well. So that we've done a playlist actually with all the interviews we've done with NinjaTrader. So you guys can go and take a look at over there if you don't understand any of the terminologies that we've done, and also the epic interviews that I did with Jim as well, right? This was
Oh
about a
my
few
God.
months ago, and also with Tom as well. So you guys can catch all of that in the playlist that we've put here. That's on youtube.com/master the markets. Coming back into the charts again. So let's do this together, guys. So you see on this on gold futures contract, I'm here on February expiring. So over here, the trend at the moment. So we always start with the trend and the phase. What we have done here, quite unique in Master the Markets, is like what you're saying, Jim. We wanted to get the framework right first. When I began my trading journey about 15 years ago, I used to always think, okay, everybody talks about swing trading and capturing a swing move and all that. But then I was looking for something quantitative, right? Because if you don't have something quantified, some people might say that's a top, some people might say that's not. Some people might say this is a top, some people might say this is a bottom. So it becomes very subjective. And then also when you're in real time, you don't know when is the swing ending, when is the race finishing. So I was looking for some kind of a framework, right? So I was looking for something where somebody has quantified. I mean, it doesn't need to be the holy grail, but some kind of a framework where somebody has quantified what a bottom is and what a top is. And then if they have done that, then I can quantitatively say, even when I show 10,000 people, including myself, I can say, you know what, that's a swing move and that's ending there when that top confirms. And then from there, I can then find out the trend, the phase, the tree stats, which we have talked quite a lot about. So that is, in essence, what we have done here. So the essence is, and we can't take credit for all of this. This was passed on to us by quant traders who did the work back in the 1960s. So, what they did is they passed on the formulas to us. I was very lucky. I met them by chance. There's nothing by chance. When you're looking for something, you usually meet the people anyway. As they say, what's that popular saying? They say when the student is ready, the teacher appears, right? So
That's a good one. That's a good one. Yeah.
Yeah, it gets you back to karate, isn't it? Taekwondo, the Karate Kid and everything. But anyway,
Yeah.
so those are the guys who gave me the formula. So what we have is, so if you can see the orange arrow, that's the top. But then that orange arrow only comes when we get the confirmation bar here. So according to the formulas, this is the bar that fulfills the formulas and then confirms this top. Okay, and this you can apply on any time frame. It doesn't matter, 4 hour, 1 hour, 15 minute, 1 minute, name it, or weekly, monthly, whatever. So the formulas apply across the different time frames, and then the same thing for the bottoms, right? So the bottoms over here, and then the confirmation bar for that bottom came here according to the formulas. As I said, it's not the holy grail, but it's a framework. Now, from that framework, as you can also see, then there's also the other indicators here. We've overlaid that with also the trade guiders, Gavin Holmes and his team volume indicators. So we look a lot with price, which is what we got over here, combine that with volume to capture the bigger runners. And that's what we've done with gold, which I'll explain in a minute. So I've given a bit of a background on the framework, what we've done. The essence of that is first to quantify what the top and the bottom is, okay? From there, now I'll go to the second part. So the second part is then defining your trend in a quantitative basis, and from the trend, what the phase is. So let me explain that. So at the moment, in terms of gold, as you can see, what we have programmed here, it says downtrend. Now, why is that? So I can quantitatively prove that. I'll just move the Smart Center Pro to the upside here. So here, until here on the daily chart here, and I'll go to the higher time frame soon, you can see that it was a clear higher highs and higher lows, right, on a quantitative basis with the framework we've got. And then you can see that at this point, it took out that low, which when we got a price structural failure. And then it came back up, right? And this top hasn't been confirmed yet. Don't confuse it with this arrow. This arrow is with the trade guiders arrow. They look a bit similar, but our one. So according to ours, the top hasn't been confirmed. And even in trade guide, even when you click on that arrow, it will tell you as well what it actually means, right? It just says a trap up move. So in any case, so at the moment, in terms of the trend, if this is a downtrend, the top hasn't been confirmed yet, according to our formulas, okay? So it's a downtrend. And then in terms of the swing, so you see in a trend, right, we usually got one part which is in alignment with the trend. And we call that phase one, the top to bottom move in a downtrend. Now, this part here is, you can call it the retracement, you know, the profit taking, whatever you want to call it, right? I know you don't like the word correction. I don't usually use it as well. I still remember, Jim. So this is what we call the phase two, so the retracement moves. And then after that, it comes back, it reverts back again to phase one, and then back again to phase two. So this will keep happening. It's a recurring pattern. It's to do
Okay,
with...
so it's not like phase one, phase two, phase three, phase
No.
four, phase five. Just it's a one or a two. If it's with the trend, it's a one. If it's going a little against the trend, it's a two.
Got it. Absolutely spot on. That's right. Yeah.
Okay.
So in a downtrend, top to bottom will be a phase one because it's going in the same direction. In an uptrend, it will be bottom to top is your phase one, basically. Right. So we got all that. And of course, as I said, if you want to go in a bit more in detail, watch the videos that we've done before. Now, then the other thing is, some people might be saying, Tiru, but I remember you mentioning that you're going long on gold, but it doesn't make sense because the daily is right now in a downtrend. So in a downtrend phase two, right? And you had a big seller bar here. So why are you holding on to this? And the clue comes down to, so there's a couple of ways. And I think one thing I must do mention, Jim, I think a lot of people get confused about direction and timing and confuse it with strategies. Now, how your strategy is constructed will determine where your entry, your trade management, and your exit will be. So different strategies will have different entries and different objectives. Now, if you want to keep a very simple strategy based on only one time frame, then fair enough. If you don't want to look at any higher time frame, if you just want to look at a daily, you can just go with this downtrend over here, and you wait for a top to confirm and keep taking the phase ones. Phase ones we always recommend because it usually moves a bit longer because it's a momentum. It makes sense as well. right?
So,
Now,
so just real quick, just so I'm following properly.
yeah,
So, is it conceivable that a market could get to a point where phase one and phase two are identical in distance and not in perpetuity, but for a while, in consolidation in a market that's consolidating?
absolutely. In fact, very good question. In fact, what we have seen is actually, Jim, let's say if it's in a downtrend, right? And then it starts to do this, isn't it? Right? Is
Yeah.
what you're asking. And then you're saying that the phase one and phase two, but in fact, at this moment, or just let's say bottom to top move and a top to bottom move, they're equaling out, they're consolidating basically, or more or less similar. Now, what happens here is that firstly, our framework will start to tell because it's not making higher highs, higher lows, it's not also making lower lows and lower highs. It will start to show NA, there's no trend. Basically, there's a compression happening.
Yeah.
That's the first thing. Now, if it does, and also another clue is if it does very small moves, but still is showing a higher high, but very small, but you can start to see that it's consolidating a little bit. And when you start to observe that, that's when sometimes in certain strategies, according to your rules, you don't care. But in some strategies, you will look at higher time frames and see what's actually going on. Is there going to be a change in behavior? Is there going to be a trend change? Right? And that's what we'll start doing. And now that brings on to this topic here. So if you just wanted to do a strategy very simple on only one time frame, only on the gold here, you just keep taking it on the downtrend, right? So wait for phase one here, and because it's a downtrend at the moment, I'll wait for phase one. But every strategy will have its pros and cons, right? Like as I always tell the clients, there's no car in the whole world which is the most perfect car, and also to say there's no partner in the whole world that is the most perfect partner, isn't it? All of us, including ourselves, will have our strengths and weaknesses. So same thing in a strategy. So in one time frame, if you trade, what will happen sometimes? If you keep taking the downtrend, sometimes you will see that, hey, hang on a minute, I'm waiting for a phase one, then suddenly you get a whiplash, and then you get stopped out, which is nothing wrong. I mean, just how the strategy is, but you just have to be aware of the flaws, the weaknesses of that. Now, if you want to improve your reliability a little bit more, then I would say construct another strategy for your portfolio so that your drawdown gets a bit more smoother. And I'll start looking at the higher time frame as well. So even though this is saying a downtrend phase two at the moment, when our bottom got confirmed by this blue
Yeah.
bar over here, then I will go on to the weekly, right? And see what the
Wait,
trend
before
is.
you do that,
Oh, yeah, sorry.
before
Okay,
you do that,
let me
on the
go back.
daily, I'm sorry. So we're in a downtrend right now. What does it have to take for the trend to change for this for the daily to say trend is up?
Good point. So according to the variations, what we have seen, either it's got to take out this high. That's when you can make a higher high, isn't it? That's the first
Yeah.
premise for an
Yep.
uptrend, right? Or another way, it consolidates a little bit, then takes out a high, and then that's a higher high now, right? Without taking out this low,
Yep. Got it.
right? So it's simple. It's very logical. And the reason why it will keep working, I mean, these formulas were designed back in the 1960s. And why they keep working, Jim, because it's based on the principles of the market. They'll keep repeating. And it's also mapping human behavior.
Yeah.
So now, coming back into here, now this is a beautiful setup which I always like, which is if I look on now on the weekly, right? Even though the daily is showing, so the daily was like that first, and I did this, and now it's in downtrend phase two. Now look at the weekly, right? So this is on the daily. Now on the weekly though, if you take a look over here, it's clearly in an uptrend where the last low was here, and then the current high is here, and then let me just move that a little bit away, and then you can see that that last high was there. So it's a higher high and a higher low. So if I were to just join the arrows together, it's a bit consolidated here, took out that high, right? And then after that, then confirmation came here according to our formulas, right?
Yep.
So right now, the best part is this is so on the weekly, so it's looking like this, right? So it's like that, uptrend phase two, Now, the best part here, as you nicely pointed out in the beginning, after a phase 2, if the trend holds, that means if this bottom holds, right, I will get a higher low, which keeps its trend. And then if it sustains, then it will take out the high as well. Now, the first part is, if we believe that this trend will sustain even according to technicals, and you combine fundamentals if you want to, and you use volume as well, then we will say that, you know what? If I know that after a phase 2, a phase 1 will begin, then my real question is, whatever indicators you want to use, right? Let's say order flow, Fibonacci, stochastic, your final point is to come and find out if this potential bottom at the moment, the lowest low it went to, right? Is it going to sustain at this level, okay, which is about 2,570, somewhere around the 2,560? Is that going to sustain? And the smart money is going to hold it there, and it's going to turn around, which it did with one green bar at the moment, then it's consolidating again. Then after that, whatever formulas you got, is it going to then finally confirm that bottom? According to our framework, that will be a blue dot coming in, and then that bottom will get confirmed, and by that time, that will become a phase 1. Now, what I can do now, since I gave the framework now, so you have seen what we're doing actually. Some people who are sharp will have already seen what we're doing. It's just a solid framework to give you clarity. So if you see on the daily, it was doing this, right? Phase 2 downtrend.
Yep.
Right? And that low is matching up with that on the weekly. And on the weekly, it's doing this. So by matching the time frames on another strategy, all I'm doing is I'm looking for uptrend phase 2s on a higher time frame and looking to capture that phase 2 to turn into a phase 1 on a lower time frame, even though if the trend doesn't match up.
Okay, because the P2 then is the long part of the phase on a daily.
On the weekly, uptrend phase 2, on the weekly is retracing. So then I go on to the daily to look for that potential bottom here, which is what we are seeing here, right, on the weekly.
Yeah, yeah.
And that weekly bottom, potential bottom on the daily hold to turn this downtrend around and then push it upwards and also then get the weekly to go up and confirm its bottom.
Okay.
But it all comes down to the simple logic which we put right from the beginning, which is markets move in cycles. If the trend sustains, the phase 2 will become a phase 1. That is the whole premise. And why does it keep repeating over 30, 40, 50 years? Because the simple point that nothing moves in a straight line, right, Jim?
Yeah.
Markets move in cycles. If they move in cycles, a bottom and top must be formed. Do you want to quantify it? Do you want to get a framework out of it? That's what we have done. That's the way we look at it. But the good part about this framework, because it's embedded with the nature of the markets, you can apply anything on top of it, eventually with the objective that can you capture that phase 2 potential bottom to turn into a phase 1 on this particular strategy construction and ride the wave. Now, if I did that, so if you combine that and then you see, now I go on to the daily, right? So if I did that, and now that's why we are taking it on one of the strategies towards a longer term position, towards the long side, because we're looking at a higher time frame. So on that basis, if I did this, so if I put a horizontal line, if I believe that when that daily, so we usually enter on the close when we get the confirmation bar.
Okay.
So on that basis, so let me draw another one. So over here, and then it will make more sense to people. So if I now
So by the way, will the confirmation come intraday or at the close?
At the close of the bar.
Okay.
At the close of the bar. So on any time frame, whichever bar closes, the confirmation bar will then
Okay.
come.
Got it.
Right. So so this one here. So I will change that. Maybe let's say to red. Apply. There we go. So if I believe that, so the price levels, of course, they will match up on the weekly. This is your potential bottom, right? Your phase 2, basically, uptrend. Over here, it's a downtrend phase 2. But the main question is will this bottom hold? Will this daily bottom hold? Right? And carry on to sustain to become a weekly bottom. And according to our framework, what will it tell you? Basically, there's a daily blue dot. Okay, I enter. But the premise is that finally the daily blue dot, the daily bottom, will become a weekly bottom. That means I should be seeing a weekly blue dot shortly. If my selection of that bottom to turn that phase 2 into a phase 1 is correct. And then you can then conduct different research studies to improve your reliability to see which bottom will get there. And that's why we look a lot on volume. So if you see on volume as well, to give me more confidence that the bottom will hold, look at the big volume spike over here happening as the selling is happening, saying that somebody else is buying into that move, right? And will it sustain? I get a clue from the higher time frame on the weekly, and then that will give me more confidence to hold on to it.
I see. Now, was there any circumstance where you would take a look at a smaller time frame, an intraday time
yeah,
frame?
definitely. I just gave just an example on daily and weekly. But to be honest, Jim, if you saw that the weekly was in a phase 2 here, if you really want to write more open equity, you can even look at a 1 hour and the same concept, right? On the 1 hour, you look for that bottom to hold or the bottom confirmation. It will come much more earlier, isn't it? Rather than over here on the daily, right? It will become much more earlier. And if you believe that that 1 hour bottom, the 1 hour blue dot, is going to then become a 4 hour blue dot, and then a daily, and then a weekly, man, you are writing a lot of open equity in that, open profit. And all with a quantified structure and based on cyclical movements.
So each time frame supports each other.
It's like saying, a ripple will then become a wave and then become a swell.
I like
Right?
that. That's a good analogy. I like that.
Yeah. Yeah. So basically, in other words, the 1 hour a weekly bottom was once a 1 hour bottom, which then became a 4 hour bottom, and then a daily bottom, and then finally a weekly bottom. Now, the same thing actually, everything that I taught over here, I know we're running a little bit out of time, but I'll just conclude with this, which is, I spoke about crude oil, right? In the last one I did with Tom, and I was telling him that we are looking at probably short based on the principle of the higher time frame phase 2 because it was in a downtrend before, right?
Yeah.
So we were looking, you see, weekly potential top. This is what I did when I was doing it with Tom, and we were looking at entries around here on looking at much more lower time frame, actually around here. And then we saw that I told him if it does hold that top, which I've said here, then the confirmation bar will come, which is what we got anyway, right? Around here. It's camouflaging with the other one. But we got it around here. And when we had entered around here, which you got a confirmation, you would have wrote all the way, and that's one exit point which you could have taken by the time that that top gets confirmed, by the 1 hour becoming a 4 hour top, and then a daily and then a weekly.
Okay, but now going forward here, we have not made a lower low.
Correct.
So what do we look for next?
Good point. So you see, at this point, if you understand, I mean, what are the different ways that you can actually move forward is the question, right? And then by that, then we can actually trap the price. So this is a good one for people to think about. So if I were to connect all the lines and see the framework on the weekly chart, what is it actually doing? So I'm just connecting this to this, to this, to this, and then now it's doing that, right? So it's doing this, so I draw it here, and then after that, then it's doing that, right? So at this moment over here, Jim, the question what people got to ask, whatever you use, fundamentals or technicals, whatever indicator you want to use, you're going to ask yourself, if this low is taken out, then it carries on more with this downtrend, isn't it? If it doesn't, if this low holds, that means, and confirms according to our framework, then what do we have then? We have a higher low.
Yeah.
Then that is the first time it's telling everyone, hey, hang on a minute here. I'm stopping for a while. There's a bit of uncertainty, right? This might be the first clue I'm giving you for a market change, trend behavior. And then if that higher low sustains and it takes out that high, then it will turn the trend around to an uptrend. So that's the thing people got to keep figuring out, because also it seems logical sense. It's all swing trading. Markets move in cycles, and they will naturally keep doing this repeatedly.
Yeah. No, I got you, man. This is awesome stuff. Wish we can keep chatting, man. Appreciate you being on with us today.
Pleasure. Absolute pleasure.
All right. And then what's the best way for people to reach out to you?
Best way would be, I would say, that start off with 7steps to CTP.com. I would say that would be the best one over here, which is
Okay.
always what we say. It's a lot of years of research what we've put together here, 15 years, along with our quant mentors, altogether about 40 years over here. Name, email address, and then after that, then they can get the videos straight into their inbox, basically. I think the videos, once you put that, I think, let me see if I can show them. It will look something like this, where then they will get the 7 videos, basically, and they can go through them. Each one is nice to chunk in. It's only 10-15 minutes. They can watch one a day, or if you're junkies, then they can watch it all of the same day.
That's
Right?
awesome. That's awesome.
Yeah.
All right. Well, thanks for that. So we've put that link into the 2 chats, folks, so you can see that in there and you could access it directly from there. So great. Master the markets. Love it. Tiru, thank you so much for being here with us. And, we talked a little bit about your holiday plans. We hope you have the best holiday you could have.
Thank you so much, Jim. Always a pleasure serving your audience.
All right. All right. Very good. All right. We're going to take a really quick break, folks. We'll do a midday wrap up. We'll be right back.
So, you want to be a trader? Well, you should know you're not